Massive hello to everybody. Hope everybody's having a great weekend wherever you may be, whatever you may be doing. 50 pips in the house. Here we go, here we go, here we go. 10th of September, 2017. No trade calls, no recommendations. Everybody's responsible for their own stuff. We're here for educational purpose only. So, first of all, thoughts when best wishes with everybody down in Florida. Stay safe. What's going on? Well, I really debated whether it was worth doing a video or not this week. But then I thought, it's a cop out not to do a video. So here we go at the risk of disappointing people. So not an awful lot is going on. Pretty much still in wait and see mode. On the data front, it's fairly light. We do have a lot of steady GPB data out throughout the week with Super Thursday, right? So that's going to be the focus. And again, on Thursday, we have core CPIs, unemployment numbers, the weekly jobs numbers out of the U.S., and we do have retail sales, core retail sales on Friday, but, not a crazy busy week on the data front. So a lot of it will be possible event risk with North Korea, stuff out of Washington. And again, we'll have to see what happens down in Florida. So in terms of the VIX, we're just still hovering here. I'm just going to try and go through some charts, keep it easy. Not a lot going on, nothing to write home about. In terms of the indices, if we look at SPX, no big change, right? We've been talking about the possibility for, especially in terms of seasonality, a healthy correction down would be, off those highs, something like a 4% correction. If you got a lot of Momo on some silly moves on VIX spiking, you could get a much more aggressive move. But right here, much to do about nothing. I think the big question is going to be how are we going to open post potential risk off positioning into this weekend. The bulls are going to be arguing as long as we hold above this previous resistance that is acting as support, the market is coiling. The market is going to try and go higher towards that 2,500, and the bears are going to be hanging on to the fact that we are making lower highs. A lot of people are saying this is going to break to the upside, downside. Again, you can look at it both ways. I think there's an important structural top that's being trying to made here. So we'll have we're going to have to see how this holds, but there's not a lot going on to what we discussed recently. So as always, I think a good guide will continue to be to say keep an eye on, to keep it simple, just look at this 50 DMA and see how we close here. This is coming in line with this pivotal level, bullish above, bearish below from a day close perspective, okay? Very similar in terms of the NDX. If only this is going to load, right? We're stuck here, still pivotal level. As long as it's holding above this 50-day, it can still hold bid. Not an awful lot is happening. It's going to be interesting to see how we open the week, what kind of momentum we get. But again, we're stuck here. This is going to be the bull bear line going into the week. Dow. Again, we're backing off of that 2200. Right, at a big psychological level, and you see how it's really trying to hold this 50, but we are getting all these reversals here. So it's going to be very interesting to see how this trades. And again, you can see the structure. We have these highs here that are trying to act as support. If we break through that, then we'd expect this big breakout zone pivotal level to come in, and we still consider this whole move as a kind of low liquidity chop grind. So we really expect that this needs to give it back up, and then that we decide from here whether indeed we want to go up or down. But we think that that's the path of least resistance, is to see us come back down. And the rut holding the heaviest in terms of our opinion. We still like selling this around the 50. Let's see what happens, but it's holding below. In terms of the DXY, is this going to be the week where we get a little pause? Is this going to be the week where we get a little correction? We'll have to wait and see. If you look at it from the weekly, we're still closing. We're still holding very, very heavy, and we're still holding below that 200. So most people will look at this and say, hey, any rally is a sell. We have to move back to 87s. Now, I think here's really, really extended, so it would be healthy to see a bounce. Remember, we're the first to say it doesn't have to bounce. It doesn't have to bounce. It doesn't have to bounce. Now, we're going to, after the 3 strikes, we're going to start saying, well, it's probably time. It would be healthy to get a little bounce, even if it's just a little corrective bounce back into the 200 and then we sell off. But I think that would be a healthy move. But honestly speaking, both from the bulls and the bears, it would be healthy to see a little bit of bounce. You know, the question is it just going to see a little, be a natural take profit move, bounce, or is it going to be on some headline news? Because since the positioning is so extreme, it could easily be prone to squeezing. So we'll have to see what's going on. But again, as long as it holds below this 200, you'd expect 87s to come. If it starts to close above, then you think 94s could come into play. And the other charts are kind of lining up because you see basically gold has come back into those highs. So a little bounce on the DXY, you would expect gold to sell off a little bit. And you see here that it's put in a reversal right around this 1350, these previous highs. So also this chart, I think both for the bulls and the bears, it would be healthy to see a little bit of a retracement, whether it's shallow, medium, or wide. Even if we are going to go higher, it would be healthy to see a little bit of a bounce. The problem is when all these charts line up, you know, even if you look at the CAD, look at it on the daily, really extended. You know, it almost seems like it's too good to be true because everything's lining up that way. But, you know, we have to say what we see, right? And that's the way this is looking. And again, CAD, the fact that it couldn't start to puke on bad news, right? CAD couldn't strengthen on good news. It just feels like, looks like the price action, everything's pretty much priced in. So it would be healthy to see a little bit of a move higher. Again, here on this CAD, you'd assume everybody wants to sell this. So even if you get an aggressive squeeze here, there could be room to go. And what would an aggressive squeeze? You know, back into that 200, back into those 125s would be a very aggressive squeeze off this level. You know, we're talking about 350, 350 pips, but most likely that's the level that's going to get sold. But that's the way we're looking at it. Crude is a really tricky one, right? We highlighted the fact that, you know, structurally we've been bearish, but once we came back inside this area, we said it's really tricky to look for the, you know, sometimes it makes sense to be tactical. Sometimes it makes sense to try and look for some kind of an intermediate swing. Sometimes the chart is really looking up like a big move, right? But you have to distinguish. It's not every day is setting up for a big swing. Not every day is scalpable. And here it just looks like this is probably a chart right now. Our view is that as long as we hover around here, it's a scalpable intraday, but it's hard to see it from a bigger picture. I think the shorts after this move are going to feel a little bit vindicated and they're going to stay short. But to be very frank, looking at this chart, especially here on the daily, it's hard to argue for a short, right? No matter how bearish you may be, technically, it's hard to argue for a short. I mean, it's probably easier to argue for a little bounce, but even the bounce isn't that clear. So it's a little bit, it's messy, right? It's messy, and there are a lot of moving parts. There's a lot of things going on, but you know, we're still getting these lower highs, but then here we tried to get these higher lows and then we broke, and here you're getting a mess. So you could easily argue that, you know, yes, we're still getting all these lower highs. This has to break. You could easily argue that, yeah, but look at the way this is catching a bid. This is moving up. It's trying to coil high. It just doesn't look that clear. Okay, at least to us. Maybe to somebody, they have a different pair of glasses and it looks crystal clear. To us, it doesn't look that clear. Even though if we had to think about it structurally or fundamentally, we'd still think bearish maybe, but the chart doesn't look like, doesn't give us any confidence to put in a good, a decent size or a full position either way here in terms of the next big swing move. In terms of, actually probably one of the charts that's most interesting here are the ZBs in terms of the bonds, right? And what's going on the bonds here, I think you could really make a strong case both for technically for this to be extremely bullish, and also you could argue that no matter what happens with rates because of the geopolitical risk, no matter what happens with equities, these are still going to catch a bid. I think if you think about it logically, it's very, very hard to understand why somebody would want to lock in money long term, practically virtually guarantee a loss here. But it does look bid, right? And this is another one that's really interesting to see how this trades, but it's not that clear. As long as we hold this correction, it looks like we could easily start to move higher. Personally, we've been trying to scalp this to the short side. We've been flat recently, not wanting to hold any. We wanted to hold all the weekends, long gold and long bonds and short equities, right? But here, it's going to be interesting to see how this trades. I think that this 152 is really pivotal, and I think tactically there's a good argument to try and hold for long moves, but in terms of bigger swings, in terms of structure, we like to actually use shorts to offset our shorts on the equity side, to hedge our shorts on the equity side. But it looks like, if you forget what it means in terms of yield, etc., it looks like it wants to continue higher, right? Euro, what's going on Euro? Back into this level, not really moving. We said we expected any dip on Draghi to be a gift to get back long unless something crazy happened, and that proved right. Sooner or later it's going to correct, but we're not going to change our stance. As long as we hover here, very, very tricky to make the next swing call. Day close above, 26 is in the cards. As long as we hold inside, probably the trade is to try and play for it to stay in range, so maybe tactical shorts. And if you're looking at the way it closed on the daily, it does look like it's starting to feel a little bit long in the tooth, and maybe it's time for a little correction. It doesn't have to be a huge correction, but still it looks like it may be time for a huge correction, as we discussed in the DXY in general on gold in general. That would probably mean yen. Cable, again, this is looking fairly bid. It looks like it continues to try and hold an upside rotation. It's making its way back into that Brexit puke zone. So, right here, big question is, this is the really line in the sand to see if it regains it or not. If you're trying to put in some structural shorts, it starts to get interesting here, but the price action is far from being a pure short. Ultimately, we think there's an awful lot of chop inside this 132, 128, and if we don't get sustained breaks outside this level, we think it's going to be, again, a lot of chop, a lot of headline risk, a little bit of a tricky one to discuss. And it's the same thing if you look at that dollar. It's the same thing. What's going to happen on Aussie? Is it time for it to correct a little bit, or is it just is it going to keep on catching people off guard and rip higher? We maintain that as long as we don't close above the 81 or below the 80s, it's it's likely going to be very, very choppy. What does it mean? Below the 80 mark, we think it's time for the dollar to catch a bid, and it's time for this to try and correct at least back into these 78s. Day close above these 81s, then sky's the limit. We're going to continue to squeeze higher and cause an awful lot of pain. What else we got? Just rambling on a little bit. Yen, we expected this to break. Again, we feel because of the bigger picture, this is ultimately going to try and come back into this descending trend line, possibly even lower. Similar to that DXY, as long as it holds below here, very, very heavy, shallow moves for a continuation higher. Day close above the 80.12, then we could see a little squeeze back into that 90.30, 109.30s, 109.50s, and a close above that, then 112. This is going to be a big, big, big pivotal level for this continuation lower or a correction back into the 112. So that's really the level we would be looking at on any little squeeze higher. Okay, so guys, hope this was useful. Not a lot has changed. All the charts are on the blog. We've been discussing these moves and these charts for quite some time, so fingers crossed for some action. Fingers crossed for best wishes to everybody down in Florida. Thanks for liking, thanks for sharing, thanks for all the support, thanks for all the banter, and all the guys and gals sending cool videos and stuff. Always very much appreciated. Have an awesome one. Take care. Bye bye.